Hello, this is Mike Yonkman, Chief Investment Officer for Ankerstar Wealth, giving you your week ending June 21st update. 5 things, 5 minutes. Going to talk about how calm the stock market is, a quick market recap, a brief touch on NVIDIA, talk about the economy and jobs, and then the financial advice life cycle. But before I do, I must remind you this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found at ankerstarwealth.com, and the opinions expressed are mine and mine alone. When I open up my computer, I always get that background screen that's usually calming. Like I can see over here, it's a whale, and it's just nice and calm, or it's a beautiful scenery or a sunset. And that's the way I feel like the market has been lately. And that's good news or bad news to different people, but generally it's good news. So let me show you a little bit why I say that. So this article came out yesterday. Stock market longest stretch without a 2% sell-off. That means 2% in the same day. I mean, the market has went down at times, but a quick drop or a quick gain of over 2%. It's been 377 days. And when I saw this article, I thought, wow, we're just asking for Monday that we're going to have a 2% sell-off when we put out articles like this. But anyways, I just wanted to show this graph because I thought it was great. And you can see it spikes at the end. This is a graph of how many days without that 2.05% or larger loss. And you can see back in 2017, 2018, it happened. There was the last big time where there was a long period of calm, and then since then, until this last year, we saw those kinds of moves. I'm just preparing all of you in the moment that it will happen again. It just hasn't happened yet, and that could be a geopolitical risk, that could be something related to election volatility, but it will happen. So don't totally get used to this calmness, but it's out there. And hopefully that means you're not even paying attention and you don't need to worry about it. So what do we see in the markets for the week? Pretty much flat. Let's look at a 1-year graph. This is what a calm market looks like. Just a calm increase. This is the S&P 500. The NASDAQ looks pretty much the same. There's a nice year graph. Can't miss. I wish every 12-month look back period looked like this. So, but let's talk a little bit about everyone's favorite stock that I get lots of questions on, and that is NVIDIA. And NVIDIA is a great company. We've done several different things on it and how well they've done. But and I want to explain volatility of a stock versus volatility of the market. On Thursday morning, NVIDIA hit 140. And yesterday afternoon, basically 36 hours later, it was down to 126. That is a 10% drop. And while obviously if you bought NVIDIA and you wrote it up, 10% drop doesn't sound like that much. Like I've made so much, that's great. And we have it within one of our ETFs that we actually utilize. What is a 10% drop? Let's talk about that. If you have $1,000 and you go down 100, that doesn't sound too bad. If you have $10,000 and you drop 1,000, 10,000 down to 9,000, that doesn't sound too bad. But think of it like this. If you have $1 million in NVIDIA and in 36 hours, it drops $100,000. It's all 10%. That is a big drop. It feels different when it's that kind of money. So NVIDIA has led the S&P 500. It's been the fastest growing of the Mag 7. It's driven things. It's had back-to-back what I would call perfect earnings announcements. Everything was right, above expectations and just perfect. But anything that could give them a hiccup, any supply chain, with Taiwan Semiconductor, anything, the stock's going to drop. I'm predicting 10%. I mean, it dropped 10% on no news just this past week. So beware. And I love this company, great management. But when things go up this fast, and was on Thursday morning the largest company in the world. I don't know that it is anymore. Microsoft or Apple might have passed them, but that's what we're dealing with. As far as labor, and I want to show this graph here and really concentrate in the upper right. This is the jobs added over the past several years. And the key thing I'm calling out here is those light blue foreign born. That is people that are immigrants, and what a percentage of the job growth they have been as far as the last 3 years. And certainly I'm in favor of legal vetted immigration. That's a good thing. We're not talking about rushing across borders or anything, but this is a big part of our labor supply. And in the bottom right, the graph, if you look at the black line, this is the overall, all people in the United States, the labor participation rate. And you may say, well, it looks like it's down since COVID. It's down, and it is, because we have a lot of baby boomers retiring. There's a lot of people retiring. It's looking at the total all people is not really very useful. So that blue line is what I'm going to say is the more important number, and that is people that are aged 18 to 64. Not that those are the most important people, but they are to the workforce. The 18 to 64 is the general workforce. A lot of people are retiring in the 64, 67, so of course that labor participation rate is going to go down. But if you look at the 18 to 64, it is reaching all-time participation highs again. So that's good news. So I just wanted to show that. And then the last thing, we talked about financial advice, and this is on our Ankerstar Wealth website, but it shows you there's kind of 5 different stages. Foundation. So, I meet with the kids of, I call kids of clients, and say, here's how you set up a Roth IRA. Let's get you off to a good start in building that up. Asset building, as you grow in your career, you're in a growth stage, bringing it up. Wealth generation. Then we start getting closer to retirement, and we should be looking forward to that and making sure you have a plan so you don't find out you can't retire. And then finally, retirement. And it's the early stages are about building assets, and the later stages are about withdrawing assets at the most tax efficient way and either using them or passing them on to heirs. So that's some of the different services that we provide, but there's really a long-term plan there based on your life stage. So with that, have a great rest of the weekend. Thank you. Bye.